Hello and welcome to this Wealth of Advice market update recorded on the 1st of July 2025. It seems like it's been an age since I recorded one of these updates. Matthew thankfully stepped in my absence and he's been recording stuff for you all. Unfortunately, my father passed away at the end of April, so me and my wife have taken a few weeks away from the office. I went across to Florida, maybe you can tell from the tan, but back now and thought I best record something for all our clients to watch. The last 3 months, so much has gone on in so many aspects of the world that we want to kind of cover and focus on all of that now. It does seem like a lifetime ago for me when I was waking up in Lyon about to watch Manchester United play in the Europa League quarter-final on the morning after when Trump had announced significant tariffs that was going to affect the world, and markets had collapsed and clients were ringing quite concerned about what was kind of going on, and my phone was obviously going mental that morning. Thankfully, we're here to update and explain to you that the risk that arrived in the markets at that point seems to have dissipated and reduced somewhat. If we're going to look at the VIX index, that's come down to a more steady level, and certainly the message we were giving to those clients during that crazy week back in April was, don't panic, don't do anything right now. Markets ultimately will recover, and as one lady said on Bloomberg, the market always wins. And what she meant by that was the market always goes to a point where the price becomes cheap and people will start investing again. We believe what happened across in the US was that Donald Trump was brought to his senses with regards to those tariffs by some very clever people in his government and the Federal Reserve Bank, who said if you don't change direction now, the Japanese and the Chinese were about to offload a lot of US government bonds. And as a result of that, Trump announced his 90-day delay to those tariffs. So here we are on the 1st of July. The 90-day end of those tariff delays is going to be July the 9th. We were down in London 10 days ago at an investment conference, and I said that investment conference occurred literally the day after I got back from Florida, and I would normally have never dreamed of jumping back on a train to go back to London when I landed into Gatwick the day before. But the speakers that day were so varied and interesting, I thought I had to go. So me and Jordan went down. We asked a ton of questions. We had Greg Swanson, who is head of the Republican Party in the UK. We also heard from the current chairman of the Conservative Party, former head of MI5 was also speaking, as well as a lady from the Financial Times, and they give a really good insight into all sorts of areas of what's going on in the world of investments, what's happening in Iran, what's the situation with Israel and Iran, how's that going to affect world markets, what's happening with Trump and his tariffs, how's that going to affect things as we see them going forward, and then what's really happening across in America, and why a lot of the news that we're reading right now is kind of slanted in one direction or the other depending on which news channel you're watching. That was the message we got, and everything is going to be rosy behind the scenes is kind of what everyone was saying. But from our client's point of view, you need reassurance. Are you invested in the right areas? Are we doing the right thing by picking the right funds, investing you in those areas that we think will grow in the future? Hopefully today's update will show you lots of things that we've learned over the last few weeks and months which put you at ease and hopefully convinces you that you still invest in the right areas and that good growth is to come in the months and years ahead. So the first place we have to start is how tariffs really affected stock markets in 2025. And as the title of this chart you can see on your screen shows now, it has been a very wild ride. We got to, I think it was around about the 20th to the 24th of February, and markets around the world were reaching all-time highs. Clients might say to us, well, why didn't you cash us in at this point? Why didn't you see that these tariffs were being talked about by Donald Trump? Why didn't you pull us out of the market at that point? Well, I then ask you the question, if I'd rang you on the 24th of February when markets were at an all-time high and say, we think Trump's up to something, we don't know when, we don't know what exactly he's going to do, let's pull you back out of the market. One, I would need a crystal ball to predict the exact day that we would do that. But two, most people would say, well, the market's growing, please let it ride, let's say where it's going. Obviously, you then wake up on March the 1st and you're like, crikey, I wish we'd cashed out now. But then as you can see, the first week of March, there was a bit of a bounce back. And then it wasn't until we got to the end of March into April when Trump really let the world know what was going to happen, that the market fell off a cliff. And those, I 100% appreciate, are the very worrying times for yourselves. It was very worrying for myself. We know how much funds under management we have for clients in total, and that obviously went down by a massive amount. That affects Wealth of Advice's ongoing annual turnover. We take members of staff on, we've got office space, whatever. So I'm genuinely worried at those points myself. But as we say to clients at that point, now is not the time to press the panic button. If you look at all the leading market indicators, they would have said to you on that morning in early April, now is the time to actually put more money into the stock market because stocks are so cheap. Clearly, we're not going to be calling clients at that point and saying we think your retirement portfolio, which is a low risk strategy, should be going more into the stock market because that would be too risky for yourself. But those people who are prepared to take a gamble and put more money into the market at that low point would be very, very happy with the outcome right now. But again, going back to having the crystal ball as to when the markets are going to fall, when would they recover? Nobody knew how quickly they'd recover. But then when we take a step back from this and we think about the investment strategy that we have for all of our clients, you might be invested in a moderate portfolio that has 40% in the stock market and 60% in low risk investments like government bonds and corporate bonds, or the moderately speculative is 60% in the stock market and 40% in low risk assets like government bonds and corporate bonds. What we're saying to people is if you go into that strategy at the beginning of your retirement or your investment horizon, if you're investing for other reasons, and that strategy matches your attitude to investment risk, we know that when we show you the chart, which I'm going to get on the screen for you right now, and you look at the investment returns over the last decade, yes, you might have negative years along the way, but ultimately markets go up over the long run and you will be rewarded for remaining invested. So as we come back to this chart now about how wild the first half of this year was, markets dipped, hit a low point in April, and then just in the last 2 days, markets are now back at all-time highs. So the S&P 500 did go above 6,200 at the close of play yesterday. This graph that you're seeing on the screen is a day or two older than that, and markets are back where they were. Some investors who look in at the investment valuations will notice that maybe your valuation you're seeing now is not as high as it was at the absolute peak at the end of February. That's not because of the underlying investments performing worse. That's simply because the pound is strengthened against the dollar, and because you have funds that are investing in dollar-denominated assets, stocks over there, the value of that from the exchange point of view has come down a little bit. But again, we would expect that to even out over the long run. But the really positive thing is to say the worst of this is behind us. As I say, Trump announced that he was delaying his tariffs for 90 days, and that comes to an end on July the 9th. Nobody who we were speaking to down in London 10 days ago expected any more shocks between now and then, because, as Trump always says, he wants to get a deal and he wants to come out of this looking and sounding like he knew what he was doing in the first place. Obviously, from our point of view, it didn't look or feel like that. But he's announced trade deals with the UK to come online. He's announced a deal with China just in the last few days. The European Union in the last 24 hours, I believe, is talking about getting a deal kind of signed up, as well as all the other countries around the world affected by this. So Trump, in a few weeks' time, will come on the news and he will tell everyone that he's made America great again. We do have a few other stories coming up which might contradict that. But from his point of view, he's delivered what he said. He believed for many, many years, and I saw a clip taken from the Oprah Winfrey Show recorded in the 1980s, where Trump was just a mega billionaire businessman in New York at that point, and he was saying, related to Panasonic videos and JVC videos and such like coming into the US, that this is an unfair trade balance. It's not fair on American business owners who want to export stuff to other countries and they're not getting charged as much as Americans were getting charged more than what people were getting charged. He's believed this for over 40 years. So he will tell his supporters and his base that he's achieved what he wanted to do. Unfortunately, as I say, for people like yourself, you've had very rocky few months to get back to where we were. But thankfully, when I looked at the 6-month performance figures of all markets in the season performance from the 1st of January up to the 30th of June, it's all positive again, which is good. So we've been recording these market updates now since COVID happened, which was 5 years ago in March. And just as the 5-year negative stuff about COVID was dropping out the back window, so to speak, and you can't see the COVID spike on this chart I'm showing you, it's just looking back exactly 5 years. The VIX index, being a measure of risk, was double what it was almost when Trump did his tariffs a few months ago. But as you can see, if you look over the last 5 years, there has been some risky periods when VIX does spike. VIX, as I say, being a measure of volatility in the markets. But thankfully, VIX is currently standing around about 17. The long-term trend of where you would like it to be is below 20, but as you can see in April there, it did spike well above 40. And again, going back to when we're giving advice to clients, we would not be recommending anyone be selling out of funds at that particular time, because the risk is all over the place. You went into it owning those funds, it matches your attitude risk going in. then you hold them. As I say, anyone watching this who thinks, I do not like risk, I do not like what Donald Trump's up to, I do not have any confidence in the future, then speak with us. Now is the time, if you were to say, I don't want to be in this sort of investment portfolio going forward, now would be the time to review that, maybe go to a low risk option, or maybe go into cash altogether. That might not satisfy your long-term objectives if you're going to be making withdrawals and such like, but that's where financial planning comes in. That's where we have to make sure your financial plan, your overall objectives and what you need to spend, what you need to take out on a monthly, annual basis matches up with whether your money's invested. But as I say, this thing with the tariffs a few months ago reminded people that the world isn't such a safe place from the point of view of low risk for the long term, which we pretty much saw from 2010 to 2020. It was a very sort of positive time for markets, not much risk flying about, and then for the last 5 years it's been all over the place. You will also notice by looking at this chart here that the recent incident with Iran, America pretty much bombing some of their nuclear sites, Donald Trump going onto his social media feed to tell the people of Tehran that you should jump in your car and disappear because we're going to bomb the hell out of your country. I mean, that doesn't normally happen in history, that you have a US president saying things like that. That didn't cause huge spikes in the VIX index. Again, when we were down in London talking to the fund managers down there, one of them said the only issue you'll have with Iran is it will have a short-term impact on the oil price. Iran will threaten to reduce supply. I know if you notice that they threatened to close one of the main shipping lanes which brings the oil and such like out of those areas, and that did have an effect on the oil price. That has dissipated somewhat, but again, this fund manager then went out and explained if that were to happen, the Americans would simply turn on the taps, and that's what Trump has got a catch line saying, we will turn on the taps, we'll dig for more oil. So America and maybe Saudi Arabia, who's closely linked with the US in many ways right now, they would produce more oil to kind of overcome that shortage in supply and bring the oil price down. That is obviously inflationary. The tariffs were potentially inflationary. And as I say, we're going to come on to that in the next part. So I'm sure all the clients watching this right now who've known me for several years know that me and my wife do like going on holiday to Florida. However, this year the tariffs come along and a couple of funny things arose. Firstly, we got an email from a Chevrolet car dealer a few months ago saying, in order to beat Trump's tariffs, buy your new Chevrolet right now. And I was talking about this to an American guy in a bar as I like conversing with these people to find out how the real men on the street and real women on the street react to things. And he said, well, I can't understand that. Chevrolet is an American car. Why would American cars be affected by these tariffs? Well, the obvious answer is the Chevrolet car is full of parts and components that are made overseas, and as a result of Trump's tariff charges, a lot of these parts and components would go up in price. So the base car of a Chevrolet would go up by 10, 15, 20%, whatever the tariffs would be on those particular products. A lot of Americans couldn't understand this, even though they were pro-Trump and he's going to make America great again. They didn't really appreciate that a lot of what he was talking about with the tariffs would result in a lot of their products being more expensive to them. Amazon was quoting that there'd be a knock-off in sales because Amazon purchases a lot of its gear from overseas. This is why their share price and everything fell. So thankfully, as I said, this has all calmed down and there's been some agreements made. Amazon's share price is way back well above where it was before the tariffs came in. But then I read this story recently. I thought this was very interesting, as I say, as someone who goes to visit the US quite a bit. We noticed when we were there in June that Florida wasn't busy. If you looked on how much the wait times were in the Disney parks, I think there was an article that said if you looked at June 2024, the average wait time in the parks was something like 1 hour overall to get on the various attractions. This year it was like 40 minutes. So that shows you in that example there's 1/3 less customers there queuing up to get on these rides. If you speak with Canadians, they're so peed off with everything that Trump's done recently, how it's going to affect them. They're not taking holidays to the US. Obviously people in South America feel the same way with lots of Trump's policies. So Trump's America's First policies have really hit travel going into the US. The trade war didn't help it. Now, for those people watching this who might like taking a holiday to America themselves, the dollar is weakening. The dollar's up to 137 to the pound. Over the last 5 years, I've got a spreadsheet that records for what I've been doing over there. The average exchange rate I've had is about $1.21. So the fact that it's now 136 means everything I'm buying over there in my head and what I'm spending is now over 10% cheaper than what it was a year, 18 months ago. But a lot of people have been put off from travelling, and this shows you the change in direction of travel to the US over the past 6 months. So from January to April 2025 compared with a year ago, you can see those colours that are more orange in colour shows the biggest drop off in people travelling to the US. So you can see Europeans, France in particular, have dropped off. Canadians is quite a high percentage. Other countries where Trump has actually just banned people from those countries going there, that's dropped off. And some people are predicting that the World Travel and Tourism Council are predicting that this will cost the US $12.5 billion this year. So jump back to when Trump is saying that he wants to get a deal to make America great again. This is having some direct impact on some key industries and some key companies in the US. And it is going to be interesting to see how this all unfolds in the coming 12-18 months. Trump won't want to concede that he's done anything wrong, but if you've got some big multinational companies in the US who are affected by, as I say, Canadians just not coming to America anymore, then something will need to be done, because those corporations will want to make profits going forward. So this is definitely a good barometer of how Trump's tariffs are affecting them domestically. So it's not just overseas countries and companies who it might affect. He's really having a negative impact on some of those American companies there. So this next chart also shows that is not just fewer people going to the US, there's fewer US travellers who will be travelling abroad. There's been a huge uptick over the last 12-18 months, probably going back to COVID, as the chart shows, of Americans travelling abroad. It seems every time I'm in London, you bump into an American every which way you turn. Now again, think about when I was saying earlier that the pound is strengthening against the dollar, so we're getting more dollars for our pounds. The flip will be the case, obviously, for American tourists coming over here, and they're now getting less pounds for their dollar, less euros for their dollar, and you can see that the numbers so far in 2025 is coming back down. It'll be interesting again to see what this looks like in 6 months' time, but this survey that was done in April by Future Partners explained that almost 70% of respondents said they've made at least one adjustment to their travel plans based on their current economic concerns. So again, Trump has this desire to get these tariffs in place to make America great again, all these American first policies, but the knock-on effect is not actually known until it all unfolds and comes out in the wash. But if fewer US people are travelling abroad, that will obviously have an impact on UK hotels and businesses. Maybe it brings down the price of some of the extortionate London hotel prices that I begrudgingly have to pay when I do go down there for work and other events. And I did have a London hotel manager once say to me that the reason why the price was so high is because Americans get the pound so cheap to the dollar, or they have done, that they can put the prices in higher and the Americans and such like are still paying it. So again, twofold thing. I think it's very, very positive that the pound is strengthening against the dollar, and hopefully it continues. If the war in Ukraine and Russia, which we haven't even mentioned in this update so far, if that were to come to a conclusion, if all the horrible stuff going on in the Middle East and Iran starts to calm down, the dollar will weaken even further. I think it was JP Morgan or Goldman Sachs, one of the two, who recently said that the pound to the dollar by the middle of next year should get to $1.50 maybe. I mean, it's currently 1.37, so that might be a bit ambitious. I've always had in my head, from what experts have told me, that $1.40 would be par. So we're almost there at par at $1.40, currently 1.37. So hopefully that continues. But I just thought these couple of stories were interesting to show you about what impacts the tariffs have. When I was at the event in London a few weeks ago, as I say, Greg Swanson, who apparently appears on GB News quite regularly, not something I've ever seen, but he was actually a good guy to talk to. He gave a good presentation. He's head of the Republicans overseas in the UK. I did ask him the question, a little bit tongue-in-cheek, at the end of his presentation, whether he would be buying the new $499 gold Trump phone that's going to be produced. And when I asked where it was going to be manufactured, he laughed. He said, yes, you might believe it is going to be made in China, but they're going to bring it back to America to complete the manufacture, and therefore it will avoid the tariffs, which just goes to show, I think a lot of this is all absolutely nonsense, because the majority of products that are made, whether it be a car that's being produced called a Chevrolet, and some of the parts are made in Mexico and some of the parts in Canada, you can't really get away from the fact that globalization happened en masse. COVID came along in 2020, and all big businesses and governments around the world worried about supply chain issues, looked at that point, what can we bring back domestically to make us safer if there was a global shutdown ever again in the future. And 5 years later, not a lot really changed, because ultimately it is still far, far cheaper to get certain products made in China, where you have huge factories of thousands of workers who are happy to work in those conditions on a lower salary. you would not be able to get a factory set up in America anytime soon where you get 10,000 people there working on minimum wage to produce t-shirts, to producing trainers, to be producing smartphones. It's just not going to happen anytime soon, and that's what Trump and his economics people need to understand and appreciate, that yes, he will have made his supporters happy by beating his drum and doing all this over the last few months, but ultimately the world will normally revert back to where the markets win, as I said earlier. So we now come to the part of the market update where we show you how various market indices have performed, and as you can see, the three main indexes that we show going back to the beginning of 2025, the FTSE 100 is up almost 10% there, best performing index so far this year. MSCI World Index 0.23% down, and then the S&P 500 languishing at the bottom at minus 3.53. That, however, as I say, doesn't show the full story, as I said earlier, because the pound has strengthened against the dollar. When you actually look at how the S&P on its own right has performed since January the 1st, it's actually up 5.59%. But see, because the pound has appreciated almost 10% against the dollar, when you then convert the S&P value back to pounds, it's showing a negative return on that. As I say, we've spoke about this with various fund managers. It's not something we're worried about. We do believe having a big amount invested in the US market, which is often the best performing market out there, we will continue to do that. When you look at the market performance over 12 months, again, similar picture, FTSE 100 the best performer there, and the S&P 500 in pound terms only done 5.81%. But I would much rather hold, as I say, a bigger percentage in those US funds, which is investing in your Amazons, your Microsoft, Netflix, Google, Nvidia, all the big companies that are doing really, really well. And as I say, I'm sure a good performance will continue to come from these markets in the times ahead, albeit you look at what's happened over the last 12 months there with the way the graph bounces up and down, volatility hasn't gone away. We don't know what's going to happen with the Iranian situation. We don't know what's going to happen overall in the Middle East, how that affects the oil price. They're not going to affect that, have our markets. And then, as I say, we haven't really mentioned Russia and Ukraine in this update so far because there's been no new news recently. We hope there will be a resolution on that soon. If that happens, markets might calm down even further. Thanks again for listening to the Wealth of Advice Market Update. As ever, if you have any queries or questions, please don't hesitate to get in touch.